Hey everyone, it's Emily with Remax Gold here today with Michael Poland of Movement Mortgage. Michael and I have done several deals together in the past. I love working with him. He also does open houses with me and we have so much fun. And real quick, Michael, should I pause? Can you hear that airplane above me?
No.
Okay, perfect. So obviously I'm outside today taking advantage of this gorgeous weather. And Michael, why don't you tell us a little bit about yourself? And then today, guys, we're going to jump into a first-time homebuyer discussion because I've gotten so many questions just about what first-time homebuyer programs are still available. So Michael, give us a little overview of yourself and then we'll start our discussion.
Awesome. Cool. I am Michael Poland from Movement Mortgage. I have been in the industry for 25 years. I've been a loan officer for 15. And I love doing mortgages. I love working with Emily, and I love working with first-time home buyers. So I'm excited to answer questions today.
Awesome. So I think the first thing I just wanted to discuss briefly, because I know there's still a ton of programs out there, but people have been asking me what programs have gone away. Can you just give us a really quick overview of any of the maybe first-time home buyer or assistance programs that might have gone away temporarily?
Yeah, so a lot of the bond programs are gone, and that's across the country. We do still have CalHFA. We are not currently doing CalHFA. The reason for that is there's not a lot of servicers that will take the bond loans. So what happens is if that servicer turns off in the back end, they won't buy the loan. And so right now, Movement Mortgage is not taking that risk. I've seen a lot of buyers' deals fall apart in the middle of processing. So we just don't want that egg on our face, and we just don't want to see, a buyer get 30 days in and then the deal falls apart. So there are some down payment assistance programs out there, but they're really, really rare, and I wouldn't even recommend doing those right now. That's just my opinion on that.
Okay. And just to clarify for people who don't know, CalHFA is a federal program that was helping with like down payment assistance.
Down payment assistance, correct. Yeah, so that's the California down payment assistance. There's also the GSFA. I don't know any lenders doing that one either. Again, that one's a down payment assistance program as well. But we certainly have some other options, but I'll let you.
Well, so let's talk about someone who maybe a few months ago was considering doing a CalHFA, didn't want to put a lot of cash out of pocket. What are those options available to them now?
This is a perfect example. I had somebody pre-approved for CalHFA, the down payment assistance program. They went into contract the day we yanked it, and we no longer could fund that loan. So what we did was we broke up the closing cost credit into, I gave a $3,000 lender credit, and the seller gave a $2,000 credit. So my borrower, who's actually closing this week, only needs to come up with a 3.5% down.
Okay, so they still had to come up with that 3.5% down so you did an FHA loan? Okay, but you were able to at least get those closing costs covered so they weren't out of pocket so much.
Correct. And with some of those products anyways, lenders charge points on those upfront because the lender does not make money on a bond program. We have to charge it up front. So a lot of it gets eaten up anyways with the charging the points. So this one worked out really well. He only had to come in with a little bit more than he was planning. So it worked out really well, and it's flying through underwriting flying colors. So it's been awesome.
Okay, cool. And are there any like 3% down conventional programs right now?
There is Home Start and Home Possible. That's the Fannie Mae and the Freddie Mac versions. So you can do 3% down on those. The only thing with those, they are stricter on guidelines. So with an FHA, which we first started starting off with, we can go up to a 55 debt to income ratio.
Okay. And what's the FICO for FHA?
620. And we just made national news last week because we are actually one of the few lenders that have loosened our guidelines while everybody is tightening right now. So we'll go down to a 620 and a 55 debt to income ratio. I don't know any lenders doing that right now.
Okay, but on the conventional 3% down, it's a little more strict. Okay.
Yeah, so it's not black and white in terms of the lowest FICO score that we could go, but it's going to be stricter than FHA. With my guess, getting one through with say 3 or 5% down, we're probably going to want a 680 credit score, but that
Okay.
is not black and white.
Is there an advantage? Can you tell me real quickly, why would a first-time buyer do a 3% down conventional instead of doing the 3.5% down FHA?
I like the conventional version for condos. So with condos, the buildings have to be FHA approved, and a lot of these buildings are not FHA approved. So the conventional version, Home Start or Home Possible, you can do 3% down, and the condo is pretty easy, the condo approval. So that's probably the big advantage, I think, with the conventional version. And the PMI can be a little bit cheaper too. So usually what I do is when I qualify a borrower, I give them both options to see what makes sense for them.
And it sounds like, especially for a single family home, getting both of those scenarios and putting them side by side would be the best option for a first time home buyer, in considering what the best way is for them to go. Okay. And then just for that first time home buyer, and I did have a few first time buyers last year who did have their 20% down. Can you tell me anything about what the market looks like right now for a more traditional 20% down?
Yeah, I mean, I would say it's tightened up a little bit, but nothing dramatic. I mean, we're still seeing loans go through, a 640 FICO score, let's say 20% down. We're going to have an easier time trying to get that through conventional if you're putting 20% down. So conventional loans, it really depends on the rest of the file to see if it's going to work. But no, loans are closing. I haven't lost any files during this time during COVID. My files are flying through. The only thing is employment. Got to keep us posted on your employment. We're going to ask at the beginning, we're going to ask in the middle, and we're going to ask the end twice to make sure you're still employed and you're still working the same amount of hours that you were when we started the process.
I've definitely experienced that in my past couple of deals. So I'm seeing that happen for sure. And real quick, and I'm totally putting you on the spot. We can always erase this later. But one question I get from people is if somebody has 20% down, or let's say they've got maybe 15% down, is there really a huge advantage in putting that whole 15% down instead of like 5% rather than just taking the cash?
Yeah, the mortgage insurance. Well, first, you're not going to have any mortgage insurance if you're putting 20% down with a conventional.
Right.
And we're in a market with pretty high price points. I mean, we're not Southern California, but our price points are pretty high. So when we're putting less than 15 or 10% down, that PMI gets expensive. The advantage there though is, hey, you're putting less skin in the game now, but you could always take and refinance once the values start going up. And then get out of that PMI. So maybe you get in the house faster, gain some equity, refinance, get out of that PMI.
Okay, that makes sense. And is there anything else that you feel like, based on your experience over the past, let's say 4 weeks, that you want to share with people that might both help educate them, but also to ease their minds on what's happening in the market, because there's so much uncertainty? And
I would say, I've been through this during 08 with the mortgage crisis. This is not as bad. Guidelines have tightened up a bit. We still, again, have the 3.5% down FHA, 3% down conventional. A lot of those went away in 08. Well, FHA was still there, but the conventional was gone. So this isn't as bad. The sky's not falling. We're still doing loans. I guess the major thing is employment, we lose your job, it might be a problem. It's not a killer if your income's been reduced, but other than that, sky's not falling. I'm still doing a lot of pre-approvals right now. The market seems busier than I expected to be.
Yeah, me too. Yeah, I think we're all a little busier than we expected when this all started. So yeah, cool. Awesome.
What else you got? Any questions I can answer?
I wanted to keep it simple today. I think I do have a lot of first-time buyers that I have been talking to over the past year or so that, we're kind of ready to go and now have put their brakes on a little. And so I really wanted to be able to share with them in real time what's happening right now from a lender's perspective, because you're the expert on mortgage, not me.
One other thing to note, if maybe your spouse has lost their job, with both products, conventional and FHA, we can have a non-occupying co-borrower. So a parent can hop on the loan. You can always refinance them down the road, get them off of that loan. So we still have options, so that way if income has gone down, we can look at adding somebody to the loan. So I think a lot of people don't know that. So I think that's a good thing to have.
No, I'm really glad you pointed that out, because that's a great point when it comes to people, especially if they're just temporarily maybe losing their job, right? Like furlough.
Yeah.
I don't know how that's really working, but you know, we're all expecting, you know, the governor is already looking into plans to start reopening California. So we know this is not going to last forever, but the after effects, I think, could last a while. So just understanding what is possible and what people can do right now to still move forward with their home purchase, knowing that this isn't forever, this isn't '08, this isn't going to be, you know, knock on wood, a multiple year recession. So
yeah, and lastly, actually, I just want to toss this in really quick, and this is one of the probably biggest, most exciting thing is rates are low. We're looking low threes right now for a lot of these products. So that's
right,
that's
which is
the advantage
amazing
right now.
Yeah. Okay. Wonderful. Thank you so
Awesome.
much. I always enjoy talking to you. I wish we could do it in person.
I know.
But
Soon.
yeah, I'm hoping pool party at your house here in the next few months.
I like it.
Yes. Awesome. Okay.
Well, thanks for having me.
Yes. Thank you. I'm going to stop the recording. Say bye to everyone. Thank you
Bye,
for
guys.
being here.
Thanks for listening.
Okay. Talk to you soon.